and thanks for joining us at EMII.com. I'm Caitlin Sisney with your hedge fund headlines. Today is April 10th, 2008. Bear Stearns is likely to see a lot more of the inside of the federal district court in Manhattan these days, reports Hedge Fund Daily. A day after the investment bank and its auditor Deloitte & Touche Cayman were slapped with complaint over its handling of its failed hedge funds, employees of Bear Stearns have filed a suit against their employer over basically the same issue. Represented by the law firm Hagens, Berman, Sobel, Shapiro, current and former Bear Stearns employees are alleging that the bank violated the Employees Retirement Income Security Act for the way it managed its employee stock ownership plan. By investing so much in the subprime mortgage market, Bear Stearns allegedly cost the employees hundreds of millions of dollars in retirement funds, according to the complaint. Staying with hedge fund news, it takes one to educate one. In this case, the it man of the hedge fund moment is Richard Baker, the former Republican congressman from Louisiana who now heads the Managed Funds Association, reports Hedge Fund Daily. Baker has vowed to fight any new hedge fund regulations. Baker told the Reuters Hedge Funds and Private Equity Summit, quote, "Arbitrary restraint would come at a great cost to the American economy." The MFA is on a mission to talk up the benefits of hedge funds to Baker's former colleagues, Reuters reports. Baker, who was the first member of Congress to introduce a measure requiring HF registration, now believes it should just be optional. And in other hedge fund news, Eric Sprott is putting reputation as a contrarian on the line. Hedge Fund Daily reports that the founder of Sprott Asset Management has decided that the worst initial public offering market in maybe 10 years in Canada is the right time for him to go public. According to the Globe and Mail, the firm stands to add some $1.5 billion to its value and another $1 billion to Sprott's own bank account. Observers say the fact that he is strongly identified with commodities at a time when that sector is going strong should make his IPO attractive even at a time like this. And in hedge fund news in Asia, private equity deals in India increased by more than 50% last year to more than $12 billion. But this year may see a drop in values, reports Hedge Fund Daily. Abazar Dewanji of KPMG told attendees at the VC Circle Growth Capital Forum, "I see a pause as the markets could soften further." Nearly half the PE deals reportedly occurred in Western India. Dewanji said India is one of the most attractive markets for the PE player, but to PE investors, India gives lesser returns than China. And that rounds out today's hedge fund headlines. Thanks for joining us on EMII.com. For more details on these stories and much more, click on our hedge funds channel online and read the latest developments.